Silver, gold and platinum are exploding on the ASX right now. But the big question is this: are you positioned to profit from the move, or will you miss it completely? We answer all that, plus give you our handpicked silver, platinum and gold stocks that are lining up for a run that doesn't come around often. So strap yourself in, because tonight is going to be big. We are Wealth Within, and with over 80 years of combined experience in the share market, our team is trusted by outlets like Bloomberg, CNBC, Sky News and more. Plus, we're backed by an accredited share trading course that gives us a unique edge. I'm Dale Gillham, and joining me are Wealth Within professional traders Janine Cox and Philip Tortevsky. Hello.
Hello. Great to have you back again.
Experienced traders, I like that word.
It is, and you've decided to have a holiday and come and visit us again.
I did. Is it a holiday when I'm not here? Is it a holiday when I am here? I'm not sure. My wife tells me I just play when I come up to the studio with you guys, but great to be back on. I actually did a good job last week, even though you had a bit of a cold, so well done, guys. But anyway, let's get into it now. Silver has surged to a 14-year high, which is a huge milestone, but is that because investors suddenly want more safety? Or is it really about industrial demand from things like solar and electric vehicles? Now, I'm going to throw to you because Janine, I know her thoughts on EVs and sustainability.
Loves them.
Stuff like that. Later on, we've got a uranium stock, so Janine can answer that one.
I mean, yeah, look, it's really a lot to do with the demand right now for silver, given the EV space and also the solar. That's the big one. But don't disregard the data centers. That's also requiring a lot of silver right now, and there is that real talk that if we move into a recession, that the flight to safety silver option is there lurking in the background. And let's face it, silver has been trailing gold for a long time.
What's normal?
Yes,
gold takes off, and it's silver and some of the other like the precious metals. They take off, but
it's come back now, so it's
well, that'd be good. Anyway, gold just broke out again, and platinum is also running hot. So do you think this strength is all about safe haven demand, as Phil mentioned, or are we seeing a longer term shift in how these metals are valued and used across the planet? Now, I know silver, huge, and anything technology-wise, silver's probably the most in-demand one, isn't it? Not necessarily lithium.
Probably, but gold is not going to lose its safe haven position.
Well, I know, not with my wife. She keeps loving it.
So it's really a bit of both, because there's the industrial demand that's driving things at the moment. So we're seeing that with platinum. So I really think that it's a bit of both.
It's a bit of both. What do you reckon, Phil?
Look, I mean, safe haven gold, that's not going away. What's interesting, you mentioned lithium a second ago, and to me, I recently read about how Germany's bringing out a salt battery that could render lithium. But anyway, that's going off topic.
But it's important, because a lot of people say to me, and I'll liken this to when oil was well over $100 a barrel back 15 years ago or something like, I can't remember what it was, but it was a long time ago, before you were born probably. And everybody was saying oil's going to $200 a barrel because it's a diminishing resource. It's a scarce resource, and so is lithium and other precious metals. There's only a finite amount of that. But I kept saying oil was going to halve in price soon. And oil halved in price over the next 6 to 12 months, and nobody believed me that could happen. It's because we find alternatives, we adapt. So is salt batteries going to be a better technology? Possibly. I don't know yet, but I've been reading about it for years, but it's worth looking at. Yes, Janine?
In talking to a few Queenslanders recently, who tell me that there's been a lot of explosions in people's garages, and it was lithium, nothing else.
Okay, so it wasn't a bad curry.
So when you look at that and the fear that some people have, the fear about the batteries. I mean, if there's a flood, because what happens with lithium in water? I used to love that experiment at school.
Well, definitely wouldn't. Yeah.
God bless my science teacher's cotton socks. He didn't like it when I came into the room, because I always wanted to know the ins and outs of everything. But I love those lithium explosions. Not so much in EV vehicles, though.
All right. Well, anyway, let's bring up the charts of gold gold, silver and platinum to see how things are likely to shape up over the next 6 to 12 months. And I'm going to charge you with that, Phil.
All right, let's go. Gold first on the screen right now, and this is the gold spot price, the futures price. And I mean, what's lining up right now with gold is it will make a new all-time high. That will happen over the next week or two. This pattern is absolutely textbook right now when we're starting to see a break to the upside. So to take out the high of April is, I mean, it's a very safe call.
3,500.
Yeah, that'll happen very easily. And I mean, I'm looking at gold. If it were to respect this move right now and not be one of those fake outs, we can see gold trading at 3,700 pretty quickly. And right now, I mean, that is an exciting thing because it's had a period of stabilisation since mid-April. We've had 2 months of no movement for gold. Now it's showing signs of breaking out. I mean, it is in this very, very established uptrend, if you will. And it is, if we go to the monthly chart, I just wanted to highlight that because we're not, I guess, new in this trend. It is quite mature. So, but nothing new. I mean, gold's had periods where it's ran really, really well and it's come off a huge sidewaysy type congestion that lasted, you know, from 2011 to 2024. So we're in expansion. Short to medium term, I think there's a very solid run coming on the way up.
I mean, it does look good, and I want to touch on briefly with this with you, Janine, because you've got a little bit more experience than Phil, but because gold, as Phil said, is a safe haven. I'm not saying you're old. Don't worry. Don't look at me like that. I got the death stare, people, from that. But gold is a safe haven, okay? But what we've looked at over decades and decades is the spending power of gold holds where currency devalues. So, and that sort of, I want to get your opinions on that. Should people still continue to look at that, okay, if I'm worried about the economy moving forward for the next 1, 3, 4, 5, 10 years, should I be going in gold and parking my money into physical gold? Should I be buying gold stocks? And should I be worried about it at all?
The first thing we have to look at is, should you be worried about it? I would say no. Unless you have absolutely no idea what's going on and you just bought gold and thought, you know, you don't care. That's the only thing I would say to people, because if you've got that attitude, you only have to go back and look at that chart and have a look at the fall that happened into the GFC. So if, you know, everybody thinks that, you know, gold doesn't correct. Eventually mining cycles happen, economic cycles happen, and we see gold correct. So looking at the chart again, we can see there that into 2009, the gold price did correct. It does fall away. People think, you know, if they didn't look at this chart, they would think it just goes up forever. 34%. Some of the more defensive stocks like retail, some of the retail stocks, Coles, Woolies, they will tend to fall less in a big financial crisis. But when the mining crunch happened, like a lot of mining stocks, it fell 44%. Now, a lot of people thought that gold would never do that because of its history. Because it's getting
too expensive to mine, or an oversupply, or why would it cause it to fall?
Well, the mining cycle is the dominant theme. So it's supply and demand is the huge thing there.
Yep.
But all of a sudden, we've seen with wars coming out that the demand for gold has gone up significantly. But there is still a lot of supply out there in terms of gold. It is finite, but there are more mines coming on all the time. So I think that while Phil's right about where the target is likely to be for gold, I think that people that put their head under the pillow and assume that the gold is a safe haven for 5, 10 years, I think that's wrong.
Okay, there you go.
Yeah.
All right, so we're going to look at another chart.
All right, let's get to...
Not of gold, something else.
No, silver. And I mean, this is where it gets really exciting because silver has really now taken off. And that is something we, you know, haven't been able to say for months. I mean, it had been stuck since June 2024, almost a year till June 25 in this holding sideways type pattern. I mean, it's shown much more clearly on that weekly chart, but...
A lot more volatile than gold, isn't it?
It is, yeah, it is. But I mean, in terms of movement, it can also be quite volatile as, and I'm just repeating what you said there, so well done, Phil, but you can tell it's the end of the day. But I mean, it's broken out now. That's the exciting part for silver. It hasn't happened, like you said earlier in the show, 14-year high for silver right now. In trend, the price action is resembling, you know, these really nice higher bases. We've recently just broken out to a new high at $40. So, I mean, while it's happening and while it's running, there's nothing here either on the monthly or the weekly chart to say that this is going to stop anytime soon. So, Ride it while it's hot.
So you can buy futures on silver and gold?
You can buy, yeah.
Or look at the stocks?
I mean, look, you've got to remember, if you're going to go the stock route, there's stock-specific risk that you do need to consider as well. So
I'm going to give them some stocks in a minute.
we are, but you've got earnings, you've got announcements, all that kind of stuff that is related to the stock. And then sometimes some stocks, whether they're producers or explorers, they work better or worse with the underlying share price. It means more, it means less. So they're the things you've got to think about. But hey, by all means, you can also trade futures. And
All right, let's smash it out of the park with platinum.
all right, Janine, did you want to look at this?
So platinum, it's volatile like silver. So that's interesting, isn't it? I mean, silver's always been seen as more of the trading type commodity rather than gold. But in the case of platinum, it's the same thing. So you wouldn't want to buy and hold this. This is trading. This is where you can make a lot of money. Let's have a look at some of these rises here. 60% on this move. Some of the stocks, the silver stocks and platinum stocks have done incredibly well, 70% in the rise. So if we're expecting to go to the top of the cycle now, we'd be expecting this sort of euphoric acceleration to come in, and that could mean that we're going to go to at least 2,000 and possibly even take out that all-time high as part of this move. But I mean, would you buy into platinum right now after this run? Well, it depends obviously on your overall analysis, but it could keep going. It could just go through that high and off it goes again quite easily.
I think, to me, it just says one really important thing, and that is that platinum, I mean, we always talk about confirmation, right?
We do.
It's not, it's knowing when you get that real confirmation that something has turned the corner or is ready to continue to expand. And when you look at the chart of platinum, I mean, you don't get any more confirmation, because this whole congestion here that happened from 22 to 24, let's face it, there was a very real possibility that if it broke on the downside, this is a completely different conversation that we're having.
Yeah.
And it didn't. It broke to the upside, took out the 2020 high. Yes, there will be volatility. It'll pull back. It'll go back up. But it's a really strong sign what it's done, that for the future, more medium to long term, that platinum's on the way up.
Well, look, I don't disagree with you. And I think, we have seen that confirmation, and I think there's some really cool stuff. And I think, when we bring it down, and it's really just a choice. Do you want to buy the contracts in gold, silver or platinum, which is a futures contract, or do you want to look at the stock itself, or do you want to buy the physical? Now, I don't know.
Or a CFD.
Yeah, you can buy a CFD on as well. I know you can buy physical gold and you can buy physical silver. I don't know whether you can buy physical platinum, but I don't know. I'd have to research that. But obviously gold and silver, you're okay with all that. And I'm not talking about buying jewellery. I'm talking about putting it in, like the Perth Mint or whatever it is, and they have, the Australian Gold Exchange or something like that, where you can buy physical gold. So it's just everybody's got to look at what is your strategy from here. So maybe as we look at some stocks, we can talk a little bit about that.
It is weighing it up, isn't it? Because the stocks have the specific risk, like Phil was saying, but then some of them are going to pay dividends as well. So how do you pick the least risky ones out of those?
And are the gold, silver and platinum stocks pure gold, silver and platinum stocks, or are they more diversified in what they do? Do they do gold and silver, or do they gold and something else? And that's what we need to look at as well. But anyway, all right, enough about the metals themselves. Let's get into the real question: which ASX stocks could actually provide the best gains from the rally? Now, ladies first, okay? No, you want to give it to Phil?
I'm going like this.
Oh, God,
Yeah.
he's handballing it.
That's okay. I'll go with the biggest silver player in Australia. That's fine by me. And I mean, this is one of the purest silver players that we have on our market. That's why it's quite interesting. And you can see, yes, the silver
It's called
price.
Silver Mines, by the way.
Yeah, it is called Silver Mines. Thank you.
I wanted to let everybody know.
Yeah.
No, it's Tuesday the 2nd of September, and that's Silver Mines we're covering.
Yep, that's right. All right. So, I mean, what's interesting about this, and, it goes back to the question that you posed before. Do you trade stocks? Do you trade the physical? One aspect that we didn't mention is the liquidity side of things.
Yes.
And twofold, right? If you're going to buy a physical gold or physical silver, then at some point, if you want to sell it, how easy is that transaction to do?
Yep.
How costly is that transaction to do?
And storage.
And storage and all that kind of stuff. Now,
Under the bed doesn't work because it's a bit lumpy.
Yeah, look, depends. What?
I'm not going any further on that one.
But if we go to the actual chart, in terms of transactional cost and liquidity to be able to get in and out, well, it's shown. You'll be able to know before you do that. Is this the most liquid stock on our market? Absolutely not. I mean, it's got, about, on average, about 40 odd million shares per week, which is not the worst. But I mean, when you look at the nature of these bars,
It's 14 cents.
yeah, it's not
Not a lot of money.
No, it's not. It's not that liquid, and that is the point itself. When we look at what it's done, it's trading, you know, as you mentioned, around that 14 cents level. Since 2014, it's really been resembling one of those bottom type. If it were a penny stock, you'd be staying away, right? But given the space that it's in, and given that it's almost turned the corner here, and this is the part that's exciting me, because there's been a long period. If we're looking at this purely technically, these types of formations that we've shown on plenty of other stocks on previous shows really result in one thing. And once they get through that 20 cent mark, it's primed to go for a nice little run up to at least 39, 40 cents. So that's what the exciting part about this is. I'd keep a close eye. I'd make sure that if I was going to be looking at this as an investment, really go and check that depth in the market and make sure that the positions you're trying to get in, you're able to get out and it's liquid enough to be able to enact your strategy. Because if you can't do that, then forget about it.
Well, I know this is not a stock that I would ever buy because it's under $1, but do you actually want to give your thoughts on it?
Yeah.
Oh, she's speechless.
I think that's
for the first time.
All right, I will. All right, let's just go back to the monthly chart because that's where I really like to play here. I guess for me, because it is so illiquid, if you're trading these sort of things all the time, that's different. Like Phil said, I don't go into this space, and if I did, it would be very, very rare. But you can see here that if looking at most of those bars, even those at the top there, you have to sort of work out, like what Phil's saying, where is that strongest level for the stock? And it sort of looks like it's around there for me. Even if it gets through that level, there could still be a little bit of resistance around there. I'd really want to see a retest of this low, or at least a test of that angle of that line before going into it. And let's face it, if it does take off, you've got plenty of room, and it's probably one that you'd want to rather be on it with a momentum trade, rather than trying to go against it. Some people wait for the dip and then try to pick it up before it goes. I mean, you know, that's just playing with fire, I think, especially for these sort of stocks. So, yeah, my hair would stand on end with these ones, so we don't want to see that, do we?
Well, no, we don't want to see that, but it's interesting. I want to ask a couple of questions, if I may. One of them is, these stocks, obviously that's a more illiquid type of stock. These stocks, are you looking at having them broader across your portfolio, or just having one position or maybe two positions into your portfolio? Because it's really important you understand that, because I don't know how many conversations the three of us have had with people that...
Mentors.
Yeah, well...
We've been mentoring people.
Well, we mentor people. I'm talking about people that aren't our students, that you talk to them and they go, oh, I made 50% in the last year or so, and you go, yeah, you got one stock right and the rest were crap. And they go, how do you know? Because we know, all of us know that one stock will make or break your portfolio, or can make or break your portfolio. But often people don't put much in them too. So we've had examples of people just putting small position sizes in stocks because they're scared of it going up or down, you know. And
Well, I had a conversation with a student only a week or so ago who had bought bigger stocks, mainly bigger stocks, but bought a few smaller stocks for short-term gains. However, didn't put as much in each position yet.
Okay.
You know, because they're not ready to, but they just wanted to have their foot in the water, and I think that's fine.
Yep. Cool. Yep. And what about you, Phil?
Yeah, I think if you want exposure to silver, then it's a viable option. You've also got to go back to many years ago when the hype was lithium, and I had so many friends out there that were buying these lithium stocks, which pretty much look like what we're seeing now, for that not to do much. So for me, it's more about knowing the space you're playing in. If you're comfortable in this space, and you're able to, read the momentum, follow the price, be able to transact with these kinds of stocks and this kind of volatility, then I think it's okay.
All right.
But if you're trying to play a game of a buy and hold, or if you're, getting into this market not understanding liquidity and volatility, then it can be dangerous. So
so don't try and shoot the lights out. But
And you need a really good flight plan, a really good trading plan.
Cool. All right. Well, let's get to the next stock.
All right, the next one is Sun Silver Limited. Now, this one's been around a little less than the previous one, but again, a silver player. And what I like is that it's holding the IPO price. Oftentimes you'll see it dip all the way down and break up, but this one is resembling more or following more the silver underlying spot price.
Well, that's good.
And that's
almost a Janine stock too.
Yeah, it's quite exciting. It's getting there. Maybe by the end of the week, who knows? But I mean, it's doing all the right things in terms of when we look at this level here, which to me is the most important level, that 62 cents. Given it rose off the IPO, fell on initial, went up and made that the new base above the IPO price. That's exciting. We've recently come off a pullback. That pullback's been higher than the previous one. Nice volume coming through as well, as you can see through here. I think this one's in trend. As long as you can monitor that momentum, it's very uniform and clean right now. Obviously, there's some resistance at these all-time highs, so be wary of that. But I think a trading environment more than anything, this one is right now. And while it's in trend, ride the opportunity.
So how important is, obviously we've talked about the chart of this. It's a newer stock, and I know you like a lot more data than what's...
You're reading my mind.
Yeah, because you were going to say that, so we've been around long enough together that I know what you're going to say before you say it. How important are fundamentals on a stock like this for you right now?
Well, to me, that silver chart is everything. That's the first thing.
So the underlying?
The underlying, it's going with the underlying. That's really important.
Yep.
And the second thing is the size of the company. Does it really fit the criteria of the portfolio that you're trying to, put together? Because if you set a criteria, which some people do, they'll set the criteria, and you know who I'm talking about out there, and then you go and start buying stray cats and dogs, which don't really, they don't need a home sort of thing. They're not suited to that portfolio, and try to add them in there. And then they get distracted by those little ones, and that takes their focus away from the stuff that's really going to make them the money in the long term. So
I know a lot of people don't have a rhyme or reason in how they construct their portfolios. We've seen them look like, a baby's high chair after you feed it spaghetti. It's just noodles everywhere and crap everywhere. And we see that in so many portfolios. They just go, ooh, and they're just jumping at what looks sparkly and they throw it in and they don't really have a good performing portfolio.
So I guess the question is, how do you add a silver stock to a portfolio, really, isn't it?
So you're going to answer that?
So yes, so if you've got a portfolio that you're looking for some commodity related stocks, and maybe a third of your portfolio is going to have that, maybe, it might be more than that, it might be 50% of your portfolio, depending on, how much you've steered it towards growth. If that's the case, then you might go for some, one or two of these little stocks at most, I would say.
Okay, well, let's get into one or two of those other stocks. We've got one more left in this section.
Yeah, we do, Janine, maybe.
And a whole lot more.
Is this one okay?
I think this one's actually looking pretty good, but it's come back to fill that gap. That's nice. It's got to get back through that high. It's sort of, obviously way down from where I like to see it, but I think it's got huge upside. That's just what I'm seeing right now as a potential, and it's got the momentum on its side, but the strategy to trade these sort of stocks needs to be, you need to bear in mind how far it dips, because obviously, you're not going to be riding it all the way down in these scenarios. So what sort of rule are you going to set? Or do you need to set a bigger stop, and therefore do you need to take a smaller position? That's really something for the individual. So that's around 30%. It's just not playing ball, the mouse that wants to annoy me today.
Can I ask a question? Or are you going to say something?
No.
You want fun?
Yeah.
Why $1?
Well, you read my mind just then.
Jeez,
that's why I'm the boss,
right? So historically, a lot of the fund managers would not look at stocks below $1. That's how it used to run. I would say it's probably less the case now, but it really depends on the indices that a stock's in. So if a fund manager can invest in, the top 300 and some stocks are outside of that, then it wipes these ones clean. But as soon as they start rising and their market cap starts increasing, they might jump into an index, and that makes them more popular. So this is the sort of thing that you can be watching. If a stock is getting close to that point where it's going to jump into another index, it could all of a sudden give it an extra boost in price. Like we could be looking at a stock and think, why is this one risen, 500%? Well, it may be because all of a sudden others got on the bandwagon because
fund managers needed to take up
something. Yeah.
Oh, that's okay. I mean, because to me it's about, like, we see a lot of people, they make two big mistakes in their investing or trading. One is they think these small cap stocks are going to shoot the lights out all the time, and the second thing is they think trading them really quickly makes them more money, and both of those aren't true.
Well, they might get 1 in 5 that works that way.
Well, yeah. I mean, I remember I was on a show with an expert years ago on Sky Channel, and one of these guys said he'd spreadsheeted all these small cap or micro cap stocks, and he said you had 1% chance of getting one of them right. Because that was, and he was a very well respected expert.
But we know that timing's everything.
Bingo.
Yeah.
If you've got the right analysis,
If you've got the right analysis and you know how to sort of set it up so that your probability of a win increases, that's when it might be worth taking some of these really small microcap ones.
All right, well, if you want to increase your probability of getting your portfolio right and your trading right, then this is the book for you. It's my first book. You can get it for free. You've just got to pay the shipping. If you're new to the stock market, this is the perfect book for you. It'll teach you how to do portfolio management, risk, money management, position sizing, how to buy, how to sell, etc. If you're more of a trader, then you might consider this book, but you might also consider my other book called Accelerate Your Wealth. It's on our website. But if you want to order this book for free and just pay the shipping, there is a link in the description below. Otherwise, you can head to our website and maybe get a bundle of both books together. But anyway, that's our first 3 stocks done. But stay tuned, because if you think the stocks we've just covered were great, you will be blown away by the next bunch coming up shortly. But now is the time for our trending topic. And this week, Janine has an absolute cracker.
Rare earths are essential for everything from electric vehicles to smartphones and defence technology. As the world looks to secure supply chains outside of China, Australian companies are in the spotlight, some with government funding. Before we reveal which ASX miners will surge higher from here, let's take a look at this. Lynas has risen by around 70% in the past 3 months. Lynas Rare Earths, the world's largest rare earths producer outside China, has experienced a dramatic financial downturn, with annual profit plunging by 90% for the fiscal year ending June 30, 2025. The company reported a net profit after tax of just $8 million. A stark contrast to the $84.5 million recorded in the previous year. Now, this figure fell significantly short of analyst expectations, and I'm going to tell you this was my what the moment. How many stocks did you watch fall after reporting well this reporting season, and to see Lynas do what it's doing? Now, the company cited massive depreciation write-downs as the major contributor to the result before putting their hand out to raise $750 million. Ching ching. Say the word rare earth and they will throw money at you. It's time for the opportunities.
Wow.
But can I just say the share price of Lynas is absolutely flying right now, and it just goes to show that earnings season is all about expectation and how that expectation, whether it's surpassed or underneath it. It's not the actual number itself is not always the end.
It didn't meet expectations though.
But maybe the expectation was not
that it wouldn't meet expectations.
That it wouldn't meet expectation. Yeah, and that's exactly what happened with a lot of the material stocks. It was like they were expected to be bad, but the reports weren't as bad. Even though they were bad, they weren't taken as bad as expected, and yet you get what I'm trying to say.
Good point.
But even CommBank, it was starting to fall away. It's fallen away about 13% since
from
its
the high.
But it was already falling away just before the reporting season. It reported all-time record profits, and it's still slowly falling away.
PE, they're all banging on about the PE being too high, and look, they'll bring it down to 20% before it turns around again, no doubt.
Yeah, well, why is it falling away if it's good? And it's made all-time record profits, and the answer is you can't buy yesterday's returns, can you? It's already happened. So any last words before we move on?
All right, now we have Lynas there on the screen. So you can see what we're talking about over the past few months with Lynas share price having risen up, over the last 3 months around 70%. What could it do from here? Well, the sky's the limit pretty much on Lynas. I think it will come back a bit and trade sideways for a while, given that everything that is, was going to be told to the market is known right now. They've done their capital raising. So, when companies do capital raising, it means that extra capital that could have been pushed into the share price to invest there has gone into that capital raising. So therefore, that spells a bit of a temporary slowdown for me. Once that's cleared and we see a bit more of a setup, we'll need more data on the right-hand side of the chart, and then it takes off through this prior high. We could see the stock head above $20 to $22, possibly even back to the all-time high up here. So looking quite good. And there's a similar pattern with some of the other stocks, except for Iluka looks quite different, very volatile. It's just taken off. Iluka is actually really interesting because, Dale, this stock is actually, I think it's about 70% owned by the big institutions, could be even more than that now, that are behind this, and big names are buying into this one. You can see it on their list if you go and have a look. But at the moment it's trading around 638. There's a resistance level we know there. It could be a bit of a pullback, but I would see Iluka heading up to anywhere between $8 and $10, over the short to medium term. That's Iluka. Now, my surprise one here, which is going to shock you, Dale, because it's below $1, but I looked at this and I couldn't walk away from it. One of the keys with these particular types of stocks is the government funding. Yes. So there's government backing to a lot of these stocks. So we saw that with Linus, we've seen that with Iluka. AR3 has also got government backing as well. Now I just watched this come off this bottom and I thought, well, that's interesting.
What does government backing mean? They're giving the money to exploration?
Grants, yeah. So there are some companies which are setting up processing facilities. So I think it's Iluka that's got a processing facility in WA. AR3 is actually ramping up. So I haven't looked into the full details of AR3, but do your research. When I looked at this, I thought this is probably for someone who's looking for smaller stocks worth having a look at, given the bottom that it's tested off here. But you just need to see a decent rise through some of these levels and then a continuation of a move up. But, some of these stocks you think could be quite easily traded when they get in a run in some of our basic rules that we teach.
And one thing, you just said a minute ago about how that stock had a huge percentage of institutional investors. I was chatting with a journalist from The Australian the other day. He was interviewing me for a couple of articles that he wanted. I know Phil was interviewed as well by somebody else, I can't remember what it was, but Phil was in national newspapers over the weekend.
That's exciting. Wow. You have
his head
following
doesn't fit through the door anymore for some reason. I'm not sure why.
I think I celebrated a bit too hard.
Yeah, he was in The Australian, the Sydney Daily Telegraph, Herald Sun, Hobart Times, the Wangaratta Whoopee. He was everywhere. But what I was talking about, the Australian journalist, and I said to him, because we were talking a bit about corporate owning a lot of stocks, and I said, what scares the crap out of me is right now super funds are owning big chunks of Australian stocks, and what are they going to do? They're going to be dictating to these stocks and these boards what to do.
Well, not just that, they're going to loan the stock out to the hedge funds and the sharks who want to short it down.
Well, that was my second statement, so I knew you were going to say that already, but that's why I pushed it out anyway. But look, we do need to move on now. Later on, we're going to cover a uranium stock just for Janine because I know she loves it. We've also got a viewer question around corporate action and analysing price, but there's a real trick that real trade or traders need to know, because if you don't understand what's going on with this corporate action and how it's affecting the price, it could damage your price analysis and obviously lead you to making mistakes on your trading. So watch out for that one. But anyway, if you want the skills to analyse stocks, just like you've seen tonight, visit our website, wealthwithin.com.au. But now, let's get back into our topic and uncover some platinum and gold stocks that are on the verge of serious breakdowns. I'm going to go straight back to you, Janine, because you're on fire.
Should we say breakdown or breakout?
Calm it down, go to Phil then.
All right, let's rephrase that. Breakout. Zimplatz, it's a new technique. Zimplatz Holdings, ZIM, looks like a classic setup. This little pattern here looks just absolutely beautiful. We've got these lows here, a really nice little pattern, and some of our students will be looking at that and thinking, yep, I can see that clearly. But what's also interesting is volumes increased in recent times as well. So into this low, we've seen higher volume, more money's coming into the stock. A nice little setup. Gee, I like it.
Average volume looks much better now, doesn't it?
Very good.
You right now? Or no, do you want to take over, Phil?
I'm happy to move on. I mean, this is a platinum play, and the next one is also another platinum play. And what's quite interesting about this one is that unlike Zimplatz, it hasn't yet taken off. So, I mean, if we would put on a scale where we're at in the at the party, we're a bit early, but that's okay because, I mean, you know, you see these bases unfold time and time again. They generally do give us a really nice indication of what's to come next. And when we're talking about these kinds of patterns, I mean, the longer it goes sideways, the more chance it becomes that at some point this is going to break out. We saw it in the past with this stock. Really nice period back in 2008 where you can see, you know, all throughout time, big sideways move, we get the breakout. We're trailing at those levels where price can be quite erratic, so do keep that in mind. I mean, to expect clean price action, clean trends, it's not really going to happen at these lows. At, you know, we're talking about a 2-cent stock. So be wary of that. You know, a tip I might give is to keep things to the biggest time frame. That avoids a lot of the noise in the market and allows you to really, you know, see the wood from the trees. And that's why with these stocks, I know you've mentioned it a lot, you know, people, a lot of the time, even people that come to us, they come with that real short-term mindset, looking at those daily charts, neglecting the big picture. But it's such a simple thing to, when you widen it out, get rid of the noise in the market, even stocks like this become playable.
Well, I don't drive towards a Mack truck on the wrong side of the road.
Not a good idea.
No, it's not a good idea. So, and there's an old saying, the trend is your friend. So, and looking at daily charts and worse, intraday, you're not looking at the bigger trends and you're not following the trend. But I want to ask you a quick question, and both of you can answer this if you like. What's the biggest risk on these stocks? Is it the entry or is it the exit?
I think the exit is always the biggest risk, because if you can't get out when you want to get out, it's all for nothing.
It's all for nothing. Yep. Because I know we get a lot of comments from people saying, I've got in this stock and it's gone up 50%, you know, how far is it going to go and what should I do? Well, to me, those questions you should have answered before you even entered the stock.
Yeah.
And it just shows the lack of knowledge of that person getting into the stock. And to me, you know, I'd agree with you. To me, it is when you're going to get out and how you're going to capture the profit or protect your capital. Do you want any last statements before we do the next stock?
Just that it's crazy doing that, and it's nuts not having a proper plan when, you know, there's so much information now available and there's a proper course all laid out for you ready. You don't have to do any of the research yourself. We've already done all of that. And it's just a step-by-step, easy to learn. There's no, and then you look at a chart like this and then you just know what to do.
Even on YouTube, I'll get you to go to the next stock in a second, but even on YouTube, in the last 2 or 3 days, I've seen comments on a YouTube channel of people saying, I've been taking the advice of some of these online courses and I keep losing money. And it's like, well, yeah, because it's free. And why is it free? It's not going to be great information. You know, you need to learn properly, but I'll let you go to the next one.
Yeah, and I mean, and it takes time to learn it. There's a reason why our course isn't a day or a weekend. Like, if you're serious about it, it takes time to learn the market properly.
I can learn to be a solicitor or a brain surgeon in a couple of days, can't I?
Yeah, well, I just looked at someone's portfolio.
Pilot.
Yesterday, I was just looking at someone's results in their portfolio yesterday of their trading, and this person who's done our course has a super portfolio and a trading portfolio. And I think the first year started out, it was $400 down.
Yeah.
And then $400, and then slowly each year it's just gone up and up and up to the point where it's gone gangbusters this year because, you know, it's persevering and sticking with it. She's actually got some really great trades that have just gone ballistic for her.
Oh, look, I've had students in the last 2 weeks telling me they're making 50, 100% on trades, 50% on their super funds and, you know, plus, and it's been really good. And the market has been somewhat bullish, but not like it was 2003 to 2007.
This is nothing yet compared to what's coming. Yeah. Yeah,
this is the precursor to what's coming, so I'm excited about it. But anyway, let's look at another.
All right, so we've got a gold player right now. This is Emerald Resources, and I mean, again, very much like the gold price, been tracking sideways for a little, but there is a real defined base on this one. It's $3.33, and that is the important part to think. I mean, we could even push it down a little further, but hey, that's the line in the sand for me. As long as this holds above that 333 level, trading opportunities will be there. Right now it's come off that low. Test it up. I would in fact like to see a bit of a higher base come through. We haven't seen that yet, and you can see in previous periods when we haven't seen that higher base, there is the potential that it does pull back all the way down to those levels. So, I mean, be wary of that. Right now it is showing some nice signs on the way up. we could pull back to that 370, 380, but I think it's very realistic to expect a move back up to the top of that, I guess, base, which is around that 430 level. If it can break that, there's a run up to the all-time high, which is really nice for a gold stock like this. I mean, you look at Newmont, you look at a lot of other players, and they're really shooting the lights out. They're trading at all-time highs. We could have picked 10 other gold stocks here, but gold stocks that are really, really up and overextended, these are ones that are way more practical and something you can do with today. So I think we shouldn't cover that aspect of it as well, because...
So you're saying they shouldn't go to those other gold stocks?
I mean, not today, no.
Okay.
And, you know, how many examples? Drone Shield's one, EOS is another. Yeah. When stocks do resemble that real euphoric type buying, if you're late, you're late. You've got to accept the fact that, hey, you know what?
What about FOMO? Isn't that a valid strategy?
Yeah,
What's he going to say to that?
I mean, if you want to lose, yeah, sure, but but it doesn't work, yeah, because you know.
But isn't that the way? I'm just saying, isn't it the way you start seeing a stock move, and then all of a sudden the masses jump into that after it's already had its nice move? Whereas what you're saying is these stocks are the ones you should get into now, because the nice move is highly likely to happen, and you're in early.
Yeah, correct. And it goes back to what you were saying before about, you know, knowing when to sell. It's so important. Why people neglect that, I think, more than anything, is because of the FOMO. It's the fear and the greed. The greed, the mind, the blinkers are on just wanting to find a buying opportunity. I don't care about anything else. I just want to buy something and make money. But then there's the other part of it where you need to sell to make the money, and that's where that all gets left behind. And it ties in very well with these kinds of stocks right now, because
I get it, because you know, hey, the stock I've owned has made 50%, so it's going to make me another 50%. So that's also, to me, a part of FOMO.
Absolutely.
Or you know, hey, you know, it's dropped from my buy price and I'm losing 25%. I don't want to sell because I'm losing capital, and then that's a real emotional tie to the money. But sometimes you've got to rip the Band-Aid off fast, but you've also got to understand the stock may only run 50% and then come back down again, or 20% or 100%. It's just because it did it last month or last year doesn't mean it's going to do it the next year.
Yeah, there's nothing worse than hearing someone say, this owes me, if they're in the red, and this stock owes me this much. I think, oh mate, that's a disaster waiting to happen.
Yep.
Next stock.
All right. Janine?
Now, Northern Star, I actually really like this. I know that some of these gold stocks have been euphoric, but I had a look at Northern Star to see how far it's come off, just as a bit of a test, and I'm happy with that. That's a decent pullback on the stock. It's gone up now for a few weeks. I wouldn't be trying to just jump in at this point now. We want to see a retest of that low. But this could make a new all-time high. If gold just keeps going like we're expecting, and maybe it'll go to 4,000, because I mean at one stage it got stuck around 2,000.
Yeah.
Right, so it could double. So the next level would be up around 4,000. So what does that mean for stocks like Northern Star and Newcrest? A lot in terms of the future value there. Our advanced students would be looking at this chart and thinking, yep, I can see why Janine's saying that there's more to go. And that's the thing. Often people get into stocks and they don't know how to analyse this space overhead, but it's actually quite easy when you know how. Yeah. It is critical because, you know, if you're planning on buying at this point, you're not going to say, well, all right, I'm going to risk 10 or 15% and not have no idea about what you can make on it. Why would you even get in if you don't know how much potentially you could make? So that's a big part of it for me. But I do really like this stock. I think it looks good.
Yeah, and I think, you know, to add a little bit to your point is that a lot of people have in their mind that if I get a stock like this, it's run 100% last year, so they get in their mind, I'm gonna make 100% the next year on it, and so they jump in, and then when it doesn't do it, they just keep holding on until it falls away, and they've got nothing, or it goes sideways and goes nowhere. Well, whereas what you're saying is we can calculate that with high probability of where it's likely to go and how it's likely to unfold to get to that point.
Yeah, and someone said to me the other day, oh, thank goodness for Module 4 of the diploma. Just made everything makes sense to me now. And, you know, because on the show we don't show anything really compared to what they get to see when they do the course, and it was just like the lights just came on.
Yeah, they do, don't they? And well, moving on shortly, we have a game-changing news coming out of one of Australia's healthcare players. The share price is ripping higher right now, and we'll break it all down for you very soon. But first, let's answer your questions. Well, Thomas writes, my question is about Lend-Lease. I bought it at $5.30 about a month ago. My stop loss is $5.05. The stock has run on the back of good results, but is now pulling back. What sort of strategy could one employ to manage the run and partial sells? Now, you've got that up, Phil?
Yeah, I do. Let's go and have a look at it because I'm just marking up the stop loss, which was at about 5.05 he mentioned.
And 5.05, yep.
Yeah, and there are a few things for me with this setup that he's got, Thomas, which, I mean, you know...
Why did he buy?
Yeah, and I'm trying to be, you know...
You're trying to be nice.
Educational to some degree about this, but I mean, you know, it speaks a lot to looking at a stock big picture to understand where it's sitting right now and asking for that confirmation, especially if you're trying to play one of these, you know, pick a bottom basically. I hope now he understands that what is perceived as good news or what he may think is good news coming out of earnings season will not always reflect in the share price, which is why it's so important to focus on really seeing what the price is doing first and then overlaying the fundamentals second, not the other way around.
Yeah, but he hasn't followed confirmation.
At all. And you know, we go to this monthly chart here, it's in a really long bearish downtrend. It's not resembling anything in terms of price that we generally see to show signs of a reversal yet. I won't go too far into that, but basically none of that is present. And I mean, stuff we do teach, and that's the important part, getting that confirmation. I can't stress how much we talk about it.
Stop loss is quite tight.
That's the second thing. The stop loss is very tight relative to the entry. So basically buying a dip, nothing here in the weekly to show. I mean, if it does take out this high at $6, what it's done last week or the week before is the first inkling of potential that it's going to, you know, it's got a chance to go higher, but he's bought well before that. So all of this has happened post, which has been a gamble, basically.
Yeah, so you're saying he may get out of it and may rise. You're not discounting that.
No, not at all.
Go up, but at this stage, it's still a possibility because it hasn't confirmed it's rising, that it could go down.
Yes.
From that, yes.
And the stop loss being so close to the buy price, I think with the natural volatility of things, I mean, on a weekly time frame, this stock can move well more than 4%, and that's where he's got his stop. So very tight, could be stopped out.
So his trading strategy is quite flawed at the moment. That's really what you're saying.
Yeah, I mean.
So, I mean, obviously looking to, you know, you're asking us about, all, you know, partial sells and things like that. Really, buy the book, mate. Buy the book. It's free, just pay the shipping and it'll sort all that out for you and it'll show you how to trail that up and exit at the right places and protect your money, but also not get into trades with the wrong strategy. So, as I said, grab the book, just the link in the description below. Now, let's move on to Joel's email. He says, I'm 23 and just got hooked on watching your show. 2 thumbs up, mate. However, hopefully we'll be contacting you soon to start your course. Even better, well done. But for now, I'd love to get your thoughts on Mineral Resources. I bought in at $25. From what I've learned, it really struggles to get through that $35 to $38 mark. Do you see any upside past that? Now, Janine, I'm going to go to you for Mineral.
Yeah, I really like this stock. The only thing is,
and he's doing this. This
fantastic,
is great.
isn't it? And look, I mean, this stock's really interesting. I think, you know, you've probably bought in at a really good time. Obviously, hindsight tells us that, but there was a nice little setup which you'll learn about when you do our course of how to trade those and how to set a stop loss past this. And you're seeing it struggling. You're talking about it struggling around these $35, $48 level for good reason. And you'll learn why that is also, because there's some really strong price analysis around those levels. But there's been a lot going on with the company as well. And these sort of stocks, it's really important to understand what's going on. There could be a class action. I think for Min, there was something to do with a member of the board. I can't remember if this one, there was someone retiring, but sometimes that can slow the share price down. It's you know, to us, most of the time, it's not important what's caused it. We often do the analysis and then we can see that there's going to be something that's going to stop it, but we never know, obviously, at the time until the announcement comes out what that is. But it's just good for your learning at your age to monitor that and get a good understanding of it. Perhaps even record that sort of thing on the chart so you can remember why, what was going on. Excuse me, sorry, I can't do it, Phil. You're going to have to take over.
Yeah, I mean, look, everything Janine's saying is spot on. I think be mindful of the level, as you mentioned. There's a bit of a gap below, but if there's a strategy in place, is he asking about a trading question or just that it's going to struggle at 35 to 38?
Well, he's just saying it generally can struggle at that point. I'm not sure what the validation is for that.
Yeah.
Whether that's a technical one or whether it's just, in terms of whether he thinks there's resistance here in that area.
Yeah, and for how long? So, I mean, it's all context. Why is it that important to you? For how long do you think, how strong that support resistance is? These are all the things you need to answer. So,
well, resistance is resistance till it's not anymore.
Yeah, and
had support.
Yeah, that's right. And I mean, knowing that and knowing whether it's strong or weak, that's going to determine whether the opportunity is worth taking or not.
It's more about the exit, isn't it? Like, how is he going to manage his risk to the downside and having a good set of rules? That's the most important
Maybe he
thing.
should buy my book. All right, well, Alex now writes, I bought Linus after it triggered my rules the week after it was on the show as a hot stock tip. So thank you for validating my plan and rules. I happily turned a tidy profit. The bar analysis on both the daily charts and weekly charts is showing Linus is preparing for a pullback. So do I take profit and sell my position in Linus without a sell rule triggered based on bar analysis? And to be honest, fear of losing my profit, or am I just doing the age-old problem of cutting my profit short with this idea? I don't even need to look at the chart. I know the answer.
Yeah.
All of us do, actually, don't we? Next question. Let's have a look at the chart anyway, but I think you know what our answer's going to be.
Yeah, and I think just to help out, the best way to answer this is go back and ask yourself, why did I get into this in the first place?
Correct.
Is it a long-term trade? Is it a medium-term trade? Is it a short-term trade? That'll help answer what to do next.
Can I ask a question before you get on the chart? Have either of you ever sold on short-term bar analysis alone?
Not alone.
No, not alone, but I have, when you're seeing certain type of price action, I think as the experience grows, you do allow yourself over the years to say, okay, there is something I'm seeing here, and that could be formulated into a strategy. But
if I'm trading options, absolutely. If I'm trading a stock, I've never done that. Absolutely with options.
Yeah.
Something really volatile and highly leveraged, but not on a stock. Anyway, let's go to the chart.
Yeah, let's do it because it is absolutely flying right now. And I mean, it's broken through this previous high. The question is, you have to ask yourself, are you long-term, medium-term, short-term? And just because it's gone up the way it's gone up in August, if I was to do this, right, and bring this monthly chart out and do that, right, and say to you, is it time to sell today? And you might
look like it. He's saying preparing for a pullback, but that's not confirmed either.
And I mean, if your answer was, yep, look, it's run for 5 months, really strong, it's gone from 6 to 17, I will take the sell just because I think it's gone far enough. And then I fast forward to what's happened following that, and it's gone up another, up to $26. So with a pullback as well. So that is, to me, the part, like both of you are rightfully alluding to, that yes, a pullback may come.
Yeah, so like you say, with Drone Shield, it could just rip right up, couldn't it? You just don't know.
Just identify where that highly likely pullback is to come, and then from that, make that choice on whether or not, you make the decision.
We have rules for a reason, and what we do is stick to the rules every single time. Now, Peter is next, and he writes, I'm confused by the market price of NEC following its recent report to the market. Before reporting, the share price was around $1.72. Following a good result, the share price climbed to $1.90. Now, the report included a total dividend of 53 cents per share, but the share price closed at $1.61.5. Now, the dividend represents a return of around 33% return for a quick investment. What am I missing? I have owned this stock since February this year and continue to hold it. I'm tempted to buy more for the dividend, but I suspect I'm not seeing the whole picture. Janine, I know you've got a brilliant answer.
Oh, look, I would research it first of all and find out what's being said about the stock. That would be my first thing to do. The next thing is, obviously, if you're holding it, then you would just be sticking with it. If you didn't own it, then you still need a decent rule to be buying it, not just jumping in at any time because you think, oh, there's a big dividend coming, so therefore, I want to buy it.
But as the price rises, the dividend yield shrinks.
Yeah, that's right.
Yeah. So
they might have offered a special dividend. Who knows? Like sometimes they do.
And that'll be in the dividend statement. I know I read all the dividend statements. Sometimes they give you bonuses, more franking credits, all sorts of different
Yeah, and
things.
sometimes companies might have to go through the tax office to turn a
special
dividend
ruling.
into a capital return into a dividend as well. So there's those things can happen. That's why I'm suggesting it's always good to read first company
So
announcements.
go to the
read
company website.
first, and then do a bit of a Google and see
dividend.
what's going on, what are people saying about it, just to get a fuller picture on what you're seeing.
Okay, what about the chart?
As far as the chart's concerned, look, I mean, this could be quite good. In the short term, the issue is obviously this point here. It's swung around quite wildly in reporting season, which you'd expect. The low is 1615, which you mentioned. So if it falls back below that, then there's a chance that it's going to continue to fall. But if the stock continues to rise and it goes back above the high, then it could quite as easily keep going, because the stock is, resistance is sort of up around the 240, around this 220, 240. It could end up in that space.
Yeah. Anyway, well, we pay dividends twice a year, so have a good look at what Janine was talking about. Go to the company's website, look at all the announcements and other stuff around her. But anyway, Dion's email is next, and he's going, could you please take a look at VAU? The stock has expanded over the last couple of years on increased volume, and the fundamentals look good. I'm considering entering the stock if it can hold above 50 cents for a long-term trade, with initial price target of 70 cents to 80 cents. Now, Phil.
Yes.
Yeah.
All right. I mean, we covered this stock yesterday in our Monday video, so please go and check that out. There's, a good,
Pedro.
Yeah, good 5-6 minutes on this one.
Okay, cool.
In depth, but I mean, if we go to...
So that video's on our YouTube channel?
On our YouTube channel, yep, Monday's video. But if we go to what he's marking out in terms of that 70 to 80 cent target, I quite like it, because it does line up with a really important natural level through there. And so that, to me, give that a tick. There is a very real possibility it can get to there. Where it is now, it's broken out, definitely. What's different about the month of August is that it's actually closed on the breakout above the previous high. I mean, we saw it break through here, pull back, get through there, pull back. And so there is a very real possibility that we may pull back, but given the strength of August, and we're already seeing September follow on, it's gapped up from the August to September. So very bullish right now, momentum's with it. You've just got to weigh up your risk reward and identify to say, if you were to look at an opportunity today, is it worth the risk you're willing to place on this stock to get to that 70 to 80 cent level? Because with this momentum, it could get to 70 or 80 before the pullback comes.
Long-term trade, yes or no?
I think long-term, it's definitely turned the corner. I mean, this has got copper exposure as well. Yep. And when we line up, you look at how long a stock's gone up versus how long it's gone down. Since 2016, this is the longest this stock's been in an uptrend from low to high, I think, for a very long time. And so that's the important part to think about with this, and it's sustainable, not wild up and down swings.
So he's done well.
He's done well. Just get your risk reward right for the opportunity 270, 80, and then work from there.
All right, 2 thumbs up from Phil. Now, Jules' email is next, and she says, I have a bit of a different question on Tabcorp. When I was completing price analysis, I noticed that the stock had a significant 80% drop in 2022 following a demerger into TLC. Would you take this previous price action into consideration when analysing future resistance levels, upside, or do I treat it almost as a new stock since 2022? Well, this is the stock that I was talking about, where there's a little trick that will actually show you to make more sense of this. Now, Janine's looking at me strangely.
No, I know what it is. Phil's just...
Oh, okay, you know what. But you already knew what it is anyway, so I'm going to let you take it. You're ready for me.
All right, here we go. You can see the chart there. There's a really strong support level under this. Now, obviously, some of you will be saying, well, that's really important because the stock could, make its move from there, and it has so far. But if we take away all the price adjustments that have occurred on this stock, you can see what the chart actually, the raw data actually looks like unadjusted.
So do you want to explain exactly why the data just changed?
Yeah, so when stocks when there's a corporate action on a company and they, for example, maybe demerge something, or they, sell part of the company.
Stock split.
Whatever they do, corporate actions, then you'll see an adjustment in the price. And one thing that used to really irk me is that sometimes these adjustments are not corrected straight away. So you'll see this weird looking move on the chart.
Days, weeks, or
short sellers might be thinking, oh yeah, let's get in on this and see if we can make it move. But you can see these moves down on the chart where there's been an adjustment.
Now let's finish it off. Explain then what happens and why we need that to happen.
Well, in terms of what actually happens, the company's got to they put in a report to the ASX.
Yep.
And then the ASX, they'll publish the adjusted data. So then you'll have all the data providers making those adjustments to.
Okay, so what you're saying is, let's say the stock's $1 and that company it splits off is 30 cents of that. Then what they're doing from that day to all the data prior to that, they've treated that price. They've taken that 30 cents out, basically all the data, to smooth it all out.
Yeah, they're adjusting it backwards.
Okay, so then we have the chart that we had started off with. But I want to also answer why is that critical for you to do that? Because so many people use unadjusted data because it's free, okay, whereas we don't because it's better for analysis. Do you want to explain that?
Well, adjusted data isn't the real data because obviously if a company's been demerged or sold or there's been a stock split or something, you have to take that information into account. Otherwise, you're not dealing with the proper price action.
Support and resistance levels aren't be right. Or
your analysis is going to be all over the place.
Okay, cool. Do you want to have a quick look at it?
Yeah, sure. I mean, did he mention that he bought into Tabcorp?
Well, she's basically saying the 80% drop, the demerger. So do you take this previous price action into consideration when analysing future resistance levels and upside? And Janine says no. Or do I treat it as almost a new stock since 2022? And the answer is still no. From that point of view, but what do you think now?
I mean, if we bring it back to where it is right now, it's obviously gone for a huge run. And I think you've missed the boat in terms of looking for an opportunity in the short term. Okay. I think it's very promising what it is doing, but to get in right now after we're talking about a run in 1 month of 40%, I think there's going to be a better opportunity coming.
All right, well now Shannon writes, do you consider Deep Yellow a trading stock that will run through September, or would you consider it to be more of a medium-term trade to hold for a few months until the end of December? I'm currently keeping tabs on those 240 and 740 resistance levels you indicated yesterday. So Janine, uranium stock's your favourite?
Now I know you're lining me up, but I mean the boys talked about this yesterday.
Yes.
So you talked about 240.
In the recording yesterday.
Yeah, and Shannon mentioned he monitored those levels yesterday that we're mentioning.
Okay.
Yeah.
All right, so let's just have a look at that. So 240, okay, well, you were very cute with your levels. 240 is not far away from the price action for a stock like this.
You know, Pedro's always to the cent.
He's very precise, isn't he?
To the cent, yes.
All right, so looking at that, we can see there's been a number of runs, a consolidation, a run, a consolidation. Now, it could repeat the same thing, but often you get a couple of these near the bottoms and then the stocks just take off. There is some support and resistance where Pedro's saying probably close around $3 as well for the stock. There's a gap here on the weekly chart. So, it's just going through that high. We don't know if it's going to continue until it closes above. I'd like to really see it close strongly above that high before making the assumption it's going to keep going. But it does look bullish to Pedro's credit. And then, if it does pull back and fill that gap, well, so what? You just sit there and wait. If it takes out that low, you just let it go. But looking at the monthly chart, if you were just trading this and looking at the monthly chart, it does look quite strong.
Did you breathe during that at all?
I think to answer his question, I think this has got legs way past September.
Well, that was my question is if it's going up, just let it go up.
Yeah.
Why September? And
why is September important?
Why is that important?
Because he's maybe thinking there's a short-term opportunity and that's all it is.
Yeah, but too many people think that and then they miss out on the hugest, safest money that they can get.
Yeah.
Did you guys mention something about September?
Well,
and there could be a pullback?
the show was about September. Not that it was a pullback, that this could really take off during September. So I think he's asking, is it only September or is this longer?
Well, you better tell him.
So...
Now that's in our $60,000 course. But anyway, now's the time for our hot stock tip for the week. I'm going to give it to you, Phil.
Yes, all right. Well, the hot stock tip this week is Polynovo Ltd. Now, they released some big news today relating to a US medical reimbursement proposal. I want to bring that up on the screen firstly here, and it's the announcement they've released. And I mean, in the US, Medicare has proposed changing the way it pays for skin substitute treatments. Now, right now, expensive products can get reimbursed at very high rates, while cheaper but effective products like Polynovo's NovoSorb gets less of a look in. Medicare now wants to scrap that system and introduce a one flat rate of $806 per square inch for everybody. Now, that is good news for Polynovo because it removes the reimbursement advantage that expensive competitors had. Basically, what I'm saying is the change levels, it changes and levels the playing field, protects Polynovo's margins, and could drive stronger sales growth in the huge US market starting next year. So that is all big news.
Wow.
Giving it a break, and when we go to the share price or the chart right now,
I know my skin's worth $808 a square inch.
Yeah,
Is that what I know?
that's basically what it gives them
odd.
an introduction into the market. But I mean, let's go to the chart because this is where it gets even more exciting. Big news, followed by when you look at the share price where it's sitting at huge support. Wow. And that's at that dollar level, Janine, there you go, your famous dollar level. But, you know, a dollar has been so important for this stock. It's been resistance for quite a while. Now it's support. You can see how important it has been, and some big runs have happened most recently in 2022 and 2023. Now, it is up 8% today, but when you look at a $1.40 stock, 8% is not that much on the weekly time frame. In fact, it's just broken through that previous high in August on really nice volume. So I think this one is starting to show all the early signs of finding a real bottom. And now this good news on the back of that will only add to, you know, down the track in months, years, adding that bottom line if it really starts to take a big share of the US market. So early signs of confirmation. If it can get through the high of 175, and that's more bigger, longer term picture, then I think it's going to get back to that 273
It's really
bucks.
good for the US government to do this because, you know, how often do you see government subsidies and everything else? It straight away pushes prices up because you know, the government's paying for it and the consumer's not, but you're paying through it in your taxes anyway.
Yeah.
But I think that's great. I think we should be doing more of that because, you know, drugs and medical stuff is way too expensive all over the place.
Yeah.
So, and you're looking at me as if you've got something really important to say, Janine, before I move on.
Look, Phil, you could be absolutely spot on here, but my eyebrow raised when I heard the announcement and then saw the price where it is. I thought, come on, surely it'd be worth more than that. And then when I look at the pattern, it's not really clear to me, this weird looking unfolding here. I know it's got support there, but I'm not convinced yet. I would really like to see it move up strongly first. And especially for someone who's got no education, if you haven't learnt how to trade properly yet, this is not a stock for you, given the way that it unfolds. The monthly swing's still down, that red bar's still red. You know, I'm not convinced on this one yet.
Look, the good thing is that, you know, we've got time and it's recorded and one of us will be right.
Well, everybody's a great trader in hindsight. So thank you, guys. Now, if you want more from us, check out our video, 7 ASX stocks you must own in quarter 3.